Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. Tiff, the Governor of the Bank of Canada, held an interview with CTV News where he went over the persistence of Canada's inflation rate and what he expects to happen with the real estate market in Canada. Although the Governor did have a lot to say about inflation in Canada, and a lot of it was very substantive.
Every time we survey Canadians, what do we hear? They don't like inflation. They don't like the cost of living going up.
Tell me these studies don't cost millions of dollars. Anyway, in all seriousness, we will be covering some of the inflationary commentary on Wednesday or Thursday as the inflationary data for October comes out. So today what I want to do is just briefly talk about what he had to say over Canada's real estate market. The Governor was asked straight up whether or not Canada was in a housing bubble, so I wanted to go over what he had to say in terms of housing affordability and where he thinks things are going in the future. As I mentioned, we will have an update out after that inflationary data is released on Wednesday, so make sure you click like and subscribe to get those updates. But for now, let's get into this real estate. So after Evan Solomon and Tiff Macklem had sparred about whether or not the Bank of Canada could control inflation,
are you in control? If inflation is global supply chains,
they moved on to whether or not there was a real estate bubble in Canada.
And people are saying, well, low rates are driving crazy house prices, and we've got concerns now about a housing bubble. Do you have concerns about that?
The Governor did acknowledge that the Bank of Canada has been worried about a bubble in Canada for quite some time.
We have for some time expressed concern about housing. It is a vulnerability here in Canada.
And obviously those concerns are quite well founded. There was a report out last week by Moody's saying that a lot of the Canadian real estate market is by far overvalued. So I think that's definitely a concern to be taken into account. But the Governor did go on to stress the reasons for this real estate and housing bubble. He did acknowledge that low interest rates have had a lot to do with it, as people are overstretched and fear of missing out is causing them to overbid for houses, which is driving up the price of our housing market.
Some households are overstretching to get that house. Interest rates are low, and that is fueling strong demand for housing. And there is a risk you get into these extrapolative expectations. People have a fear of missing out.
So it's great to see Tiff Macklem acknowledge that low interest rates have had a major role in pushing up the prices of our houses, and we've done videos on this before. How with the era of cheap money coming to an end, that housing affordability is going to get a lot harder in Canada. But then the Governor actually moved on to echo what we've heard a lot from our leaders and from the politicians, saying that although interest rates is a driver of these housing prices, the predominant driver is a lack of supply.
The solution to this problem is supply. We've got to increase supply of housing.
And this is the crux of what it always comes down to. What is causing this huge increase in Canada's housing crisis, in the price of Canadian real estate? Is it interest rates, or is it a lack of supply? Most of the politicians that we hear from, especially the Prime Minister, have said it is a lack of supply. And it doesn't sound, if you recall in the election, that it was not monetary policy, meaning interest rates.
I don't know. When I think about the biggest, most important economic policy this government, if re-elected, would move forward, you'll forgive me if I don't think about monetary policy.
But I think it was refreshing to see Tiff Macklem actually acknowledge that it is interest rates to a certain extent and the access to cheap money that are driving houses so high. So while we see that the rise in inflation is probably number one on the Bank of Canada's list of concerns, it is good to see that housing overvaluation is definitely high up on its list. As Canada has seen the price of its houses skyrocket over the past 18 months, 2 years, and have seen even more people shut out of the housing market, the fact that this at least is on the Bank of Canada's radar, and they do understand that their policies have been at least contributory to the rise in real estate prices, it's good to see that that's actually at the forefront of their minds. Whether or not they're going to do something about it, though, it does seem as though they think that will be fixed when the rate hikes coming next year, according to this interview, between April and September.
It's going to be sometime around the middle of next year. And if you want it in months, sometime between April and September.
When those rate hikes come in, turning off the taps of cheap money will help to cool that housing market at least a little bit. They are thinking that supply is the main driver, but obviously they know that when they raise interest rates, that should help at least marginally lower the demand for these expensive houses that have helped to push the price of real estate up in Canada by so much over the past couple of years, especially during COVID. But how much those interest rates do go up over the next couple of months and years ahead will be directly impacted by the inflationary data that is coming out monthly. We will be having an update on that inflation data when it comes out this Wednesday, and we will continue to keep track of it, obviously, as everybody's wanting to know when will interest rates happen, and more importantly, how much will they be?
People are listening and they say, okay, interest rates. Will the governor have to jack interest rates to stop inflation?
So we'll keep track of that on this channel. Make sure you click like and subscribe to get those updates, and thanks for watching.